Hello, everyone. This is your daily brief for October 26th, 2023. We're going to start with the gold daily futures chart. Prices continue to consolidate, currently trading at 1986. Earlier in the day, they hit a high of 2003. They keep probing that 2000 area. What I'd like to see is prices just to kind of drift sideways to maybe upwardly towards the 2000 area. What I don't want to see is I don't want to see a sharp breakdown, say below 1960 or 1940 would be like the final line in the sand. If they stay up here in this area, I think that's great, and I'll continue to look for a breakout above 2000, hopefully in November. Jumping over to silver, prices have basically just been consolidating. Line in the sand remains $22. So as long as they stay above $22, I'm looking for them to trend higher. Platinum, looking at the daily platinum chart, we're getting a little movement here. More or less, they're kind of just staying in this channel. Uh, the big level here is this downtrend line. We'd have to get a couple closes above that to make me think platinum is breaking out. So call it the 940 level. If we get above 940 in November, I think that would be that'd be good. That'd be a good sign. Over to GDX, the daily GDX chart. I have not been impressed with miners. They're acting more like stocks than a derivative of gold right now. We're technically GDX is still above uh, the upper channel boundary here, but I don't like the price action. And if the S&P 500 continues to weaken, that could drag miners lower. So we'll have to see what happens here. We still got this big gap. The line in the sand for me remains 2770, where the gap was from that big up day. Over to the S&P 500 daily futures chart. Prices dipped below the 4190 level, and they're recovering right now. This level needs to hold. This area needs to hold. Prices need to make a swing low and start to trend higher. We could see a bounce here. What I'm afraid of is if prices continue to break through here, like after next week's Fed announcement. That would tell me that this could be the beginning of a sharper decline. So that's what I'm watching for right there. And we'll see what happens, I guess. Over to the 10-year. So we had a big reversal day here. Prices bounced, and actually they made a swing low. So the short-term trend is higher right now, and they're just kind of consolidating below 5%. My fear is what happens if we get a breakout above 5%. So next week we got the Fed meeting and the Treasury quarterly refunding announcement. If we see a sustained breakout above 5% after, that would be very bad in my opinion. So we'll see. But I'm watching 5% like a hawk. I wanted to leave you with Bank of America. So this is a weekly chart. I wanted to point out that prices are below the March banking crisis low right now. So some banks are continuing to weaken. And I don't know if that's going to turn into a bigger problem, with the commercial real estate and all the things that are going on with that. So, and higher interest rates are not going to help. So that's a potential factor we need to look at, more stress in banks. All right, that's it. We'll see you later.